Welcome to Week 1, Video 2, Introduction to Financial Statements. Now, our learning objectives in this video, number 1, describe the content and purpose of an income statement, statement of retained earnings, and balance sheet. And secondly, to prepare an income statement, a statement of retained earnings, and what's called a classified balance sheet. In preparing financial statements, we always start with the income statement. So here we have Sierra Corporation income statement for the month ended October 31st. Now this is important. This is a time period statement, and it covers the period of a month ending October 31st. So the summary of all these transactions here are the results of transactions that have taken place between October 1st and October 31st. We start with revenues. There's one revenue account, service revenue. Now every time the company performed services, it earned revenue. Total amount of revenue was $10,600. Now we incurred expenses in order to earn that revenue, and we list the expenses. Now they're listed here in size, but it's not necessary. You can list them in any order. But notice we're going to add them up. So we move to an inside column here, add them up, draw a line, and carry the total to the outside. Here we list the expenses: salary expense, supplies, rent, insurance, interest, and depreciation. Total expenses $7,740. So revenue is $10,006. Total expenses in order to earn that revenue $7,740. The excess of revenue over expenses is referred to as net income or profit, and that is $2,860. Now the corporation is owned by the shareholders, therefore this money belongs to the shareholders, and that brings us to the next statement, the retained earnings statement. And this statement is also a time period statement for the month ended October 31st. Now we just started business October 1st, so we've had no earnings prior to October 1st. So retained earnings are earnings that are kept by the company. Now, in the month of October, we earn net income, as we saw in the other statement, $2,860. So therefore, the retained earnings is $2,860. Now, they decided not to retain it all. Instead, they're going to give money back to the shareholders. And they do that in the form of dividends. And they paid $500 to the shareholders. So therefore, what remains in retained earnings at the end of the month is $2,360, and that will be the beginning retained earnings for November. The third statement is the balance sheet, and you will notice that it is just October 31st, 2012. So the balance sheet is at one particular point in time. This particular time is close of business October 31st. And here are the assets of Sierra Corporation. Here are the liabilities, what the company owes, and the balance, the shareholders' equity. Now you can think of the balance sheet as a snapshot, whereas the income statement is a moving picture through the month of October, and a snapshot at the end of the month of October. The assets are listed first, cash being the first one, accounts receivable, supplies, so on. So I have total assets $21,910. Then the liabilities are listed, and you can see they move to the inside column. Carry the total liabilities out here, $9,550. Liabilities, notes payable, accounts payable, salaries payable, interest payable, everything payable. Shareholders' equity section is next. The common stock, $10,000. Retained earnings is what I carry forward from that retained earnings statement. Total shareholders' equity, $12,360. So total liability plus shareholders' equity, $21,910, and we balance. Now this shows you what a classified balance sheet is. The previous balance sheet was just a straightforward assets, liabilities, and equity. But in reality, what we do is we classify the assets into short-term and long-term, property, plant, and equipment, and intangible assets. So we categorize it. Current assets are assets that are going to be used up in the next accounting period. And they're listed in order of liquidity. Cash, $6,600. Short-term investments could be turned into cash very quickly. Accounts receivable will be collected. Inventory will be sold. Supplies will be used up, and so on. So we have total current assets of $22,100. If we had any long-term investments, they would be listed separately. Investment in the stock of another company. Investment in real estate to be used later. So we have long-term investments, $7,200. Then we have property, plant, and equipment. First land, then we have equipment, less accumulated depreciation equipment. That represents the amount of the equipment we have used up. We will talk about that in later videos. So therefore we have a net value of that equipment of $19,000. We paid $24,000, we've used up $5,000. Total property, plant, and equipment, $29,000. Intangible assets and total assets, $61,400. To continue then on the liabilities side, we also segregate or categorize liabilities as to those that are short-term and those that are long-term. Current liabilities are the debts that we owe that we must pay in the next month to 6 months. Notes payable, accounts payable, salaries and wages payable, interest payable, and so on. Notice how we add them on the inside column, carried it to the outside. So it says current liabilities, $16,050. Long-term liabilities, mortgage payable, notes payable, carried to the outside, $11,300. Total liabilities then, this plus this, $27,350. Shareholders' equity section, there's no categorization here, simply the common stock and the retained earnings. And the retained earnings comes from the retained earnings statement, and the common stock represents the investment the shareholders have made in the company. And there we have total liabilities and shareholders' equity, $61,400. And that is a classified balance sheet, and you would be required to produce a classified, not a simple one like we first did.